Welcome back to Markets Today. I'm your host, Mbithe Mwema. We are talking about technology, and with us virtually is Karina Ramberger, who is a Chief Executive Officer for Bionic. Bionic is an interesting company. It was recently acquired by MFS Africa. It has its core operations domiciled out of Uganda, and it has been championing digital payments in East and West Africa. We want to understand from Karina, what are the operations of Bionic, what is the outlook for digital payments in this continent, as well as what is the outlook for fintech and acquisitions, and is there something interesting that's in the pipeline? We start off our conversation with Karina by asking her about the outlook for the company and what the company is really known for and its core operations. Please give us an overview of Bionic operations, the strategy, regional footprint, and the provision of last mile digital payments.
Yeah, absolutely. So the overview for Bionic, we set out to make it easier for businesses and organizations to use mobile money the same way that they would use banks, but to be able to penetrate the last mile, right? So in Kenya, mobile money use for enterprises is pretty sophisticated, but it still has its challenges. And that is extremely more complex when you get into a market like, say, Uganda, Tanzania, Rwanda, Zambia, where you have multiple mobile money network operators, and you have a maybe less sophisticated enterprise-facing technological offering. So Bionic looked at that and we said, we want to make it easier for our customers to reach their customers. We want to make it easier for people to transact with SMEs and medium enterprises across the country and across the region. So our initial footprint, as you noted, was in Uganda. We expanded into Kenya, Tanzania, Rwanda, and Ghana. And with this acquisition and merger with MFS Africa, we'll be reaching into 34 different African countries across the next year. And what we'll be doing is providing the same digital payments management toolbox and functionality that we provide in the 5 core markets we're in now across all 34 markets.
All right, thank you for that. If you can still hear me, the second question is, so what are the number of customers and mobile money transactions processed, and what are your large markets?
So the number of, we have several thousand enterprises that use our digital platform to manage their digital payments flows with their last mile consumers. We've been used to pay over 2 million individual recipients and consumers in the life cycle of our business by those several thousand SME customers. And the demand is constantly growing. We're always getting requests to link to additional payment channels and new markets. And our challenge is keeping up with the demand.
Okay, so it sounds like you're a small bank. Not a small bank, a big bank in terms of the number of touch points that you have.
I would actually liken us more to a software service company.
Okay.
So think about the experience of using Bionic is a little bit like a combination of using QuickBooks and online banking, but sitting predominantly on top of mobile money rails. And why that matters is because in order to reach more than 80% of the consumer base in this part of the world, you have to be accessing mobile money. But as a business, you need to be able to track and manage those funds the same way that you would expect to do with banking customers and bank accounts.
All right, fantastic. That makes sense. Now, when we're looking at the digital payments space, sorry, let me take that again. Bionic investors made 5 times money during their exit and at the point where MFS Africa acquired the company. What are your views on this?
Well, I think what's important to note about the acquisition is that investors all made a good return on their investment. The valuations are not being disclosed. And investors came in at different stages in the growth of Bionic. So at every stage, there's a little bit of dilution that occurs. But needless to say, we're really pleased and our investors are really pleased that they've seen traction and growth. And what I find particularly exciting about this merger or this acquisition is that it's the joining of forces between 2 African fintech startups. And I think that that matters because it speaks to the confidence in the market, both broadly speaking in fintech and in digital payments, but even more specifically in digital payments in Africa. Kenya specifically has always been on the forefront of mobile money technology. And this technology has been a game changer over the last decade. I mean, 1 decade, we've gone from having populations that were pretty much unreached with financial services to access to mobile financial services like M-Pesa, driving digital innovation and the uptake of connectivity. So this is remarkable. The rate of change here is incredible. M-Pesa penetrates close to 90% of Kenya, and that's in 1 decade. And that's the tip of the spear. There's only more to be done in other markets across the region and frankly across the globe. So when I think about the excitement that a deal like this generates in investors, not just on the continent, but globally, and not just in fintech, but in digital payments, I think this is tremendously exciting because what it says is that the kind of historic underinvestment that has plagued fintech startups in East Africa and across Africa is, I hope, coming to an end.
All right, fantastic. Thank you so much for that overview. So you're effectively telling us there is money to be made in this space. Now let's look at the digital payments landscape in Africa. How is this looking before COVID and after COVID?
For sure. As I said, digital payments landscape in Africa has been accelerating rapidly already. COVID threw into stark relief how critical it was for organizations to be able to pay and be paid digitally. Our economies have been able to carry on in large part because we can pay people and we can collect on payments digitally. So that gave us a massive advantage during COVID, and it's also helping to speed the economic recovery as we start to see some light at the end of this tunnel. Even the fact that you and I can have this interview and I'm, sitting in my own home office and you're there, and I can collect payments. If I am a loan company, I can still send out a mobile money loan to a micro enterprise, and I can still collect on those payments. That means the economy can keep running. And in terms of digital payments, what that means is that a shift that was already happening just accelerated, and digital became part of business continuity as opposed to just kind of a nice to have in the business.
Please expound when you talk about digital continuity. So what next for this particular space, especially for your company and in the regions that you operate in?
Absolutely. It's such a great question. Really what happens next is we need to make borders matter less when it comes to digital payments. And what I mean by that is I can pick up the phone and I can call my cousin in Accra. Why can't I send the money? Why is it expensive? Why is it difficult? Those are the problems we're setting out to solve for individuals and also for businesses.
Okay, fantastic. So then what is the next point that we get into? Because you're saying some countries such as Kenya, the penetration when it comes to digital payments is extremely high. Is this going to be the same cutting across East and West Africa, and especially those markets because you do a lot in those markets?
Yeah, so a couple of thoughts on that. The mobile money penetration is high, which is crucial, but it's still not particularly easy for businesses and enterprises to access that consumer base and to track and audit and reconcile and run all the reports that they need to do in order to be compliant. So in order for businesses to be compliant and access that base of consumers, there's a gap that needs to be filled. And luckily, we're seeing a lot of interest in filling that gap, across the board. We're not the only company out there who's really trying to solve digital payments for organizations. When I look at other regions, in parts of the world or in parts of the continent where mobile money penetration is lower, there are a few different things that can happen. One is that mobile money penetration can increase, and there are a variety of different levers that can push that. Also, you're going to see additional digital payment channels coming into that space. You're going to see digital banks, and you're going to see conventional banks entering digital. Cards are going to start trying to do more innovative things that make them more accessible to a broader base of consumers. So what we see is that while mobile money will stay an important player in this whole configuration, there will be additional digital payments channels that will become more important. And that profile will look slightly different in different regions, in part driven by regulation, in part driven by technological kind of leanings, places where there are a lot of smartphones versus places where there are a lot of brick phones, places where banking is more accessible, but mobile money perhaps is not, or it's regulated differently. So while I think we'll see a lot of different digital payment channels coming up, the need to help businesses and organizations have tools to reliably access their consumer base, and for those consumers to reliably have access to the products and services that companies want to be able to provide, we're going to have to keep filling that gap. What will be important is to standardize the interface across all of the different channels as they emerge.
Oh wow, so there's still a lot to be done, and I think the competitive landscape, it's, you can't really, from what you're saying, you can't quite figure it out. There are just too many players and there's a lot that's evolving. Now, when we look at the sectors, COVID-19 and after COVID-19, you do facilitate digital payments for the SMEs. Are there sectors that have stood out in terms of taking a hit, and are there sectors that are showing a bit of recovery at this point in time?
I think I'm not going to be able to tell you anything that isn't more broadly available. Okay. Anything with transport and tourism has been hit really, really hard. Education has been hit really hard. Entertainment, obviously, restaurants, bars, anybody that is bringing people physically together, it's taken a big hit. What has obviously grown exponentially are services like transport and delivery, and we're seeing that expand across sectors. Supply provision, online services and tools, things like being able to better manage a remote workforce end to end, whether that's getting ergonomic chairs and screens to employees who are going to be working from home indefinitely, whether that's improving their access to better, fiber optic internet, et cetera. Those companies, those products and services, they're just expanding so rapidly they can barely keep up.
Okay, fantastic. All right, so two more questions and we can close this part. When we're looking at fintech, we've seen maybe two notable transactions in the region in Africa. Do you have a sense of what is happening in this space? Is there a theme that's emerging? Are there certain fintechs that offer certain services that are becoming attractive? Maybe you can just give us an overview from where you sit.
Absolutely. And you're right. This has been a very exciting year for investment in fintech in East Africa. Billions of dollars have been poured into the sector on the continent. And that's at a time when markets are a little bit cautious, which again just speaks to the power and the potential of what is going on here. I think at the moment we're talking about consolidation. As you said, it's a complex, highly fragmented payments landscape. That has to do with regulation, it has to do with technology. And as we see acceleration and larger investment, we're going to see many players become a few players. We'll be one of them. And I think that's really important because you don't want a complete monopoly. You want variety. You want to make sure that you have competition. It's better for consumers. But the potential in digital payments is truly infinite, because in order to keep the world running, we have to be able to send value and receive value. Okay. And that doesn't recognize borders. So while we're talking about investing in payments infrastructure and digital payments management tools in Africa specifically, Africa is connected to the world and the world is connected to Africa. So we'll see consolidation. We'll see a game of many become a game of few. We'll see those few really push one another to innovate and to provide safe and valuable services to their consumer base. And we'll see digital payments being on the front edge of connecting African consumers and innovators and businesses to their counterparts around the world.
All right. So any parting words when we're talking about digital payments, when you're talking about Bionic and the outlook for fintech in this part of the world?
I think we still have a long way to go, regionally and globally, when we're talking about financial inclusion and normalizing access to to financial services. Digital is a way to do that. It's a clean, safe, effective way of doing that. And what I get excited about is seeing the way in which we innovate in order to expand digital financial inclusion, setting trends and standards for the way that financial services are being revisioned and reimagined around the world.
All right, that was the Chief Executive Officer of Bionic, which is a digital payments company domiciled out of Uganda. Karina Ramberger was talking to us about the recent transaction, what Bionic does, and the outlook for this space. The key takeout for us, it's a highly fragmented space. Consolidation could be on the way. Hopefully the next time we host Karina, she'll tell us whether she's looking out for an acquisition. That's all from our team here today. I'm your host, Mbithe Mwema. See you next time. Good day.